Hello, everyone. I hope everyone is doing well. It's me again, Letitia A. Togba. I'm a CPA and the owner of LAT CPA firm. This week, I've been covering bookkeeping and tax basics. Day one, we went over financial statements. Day two, we went over best practices for bookkeeping and a few tips. And then today, what I'm going to talk about is going to be taxes, right? And this is going to be it's mostly going to, well, not mostly, what I'm going to focus on. Sorry, I'm trying to say five things at one time. What I'm going to be focusing on is I'm going to talk about tax deadlines, what qualifies as a tax write off, tax prep versus tax planning, and then how to select a tax professional. Okay. All right. So, as far as deadlines go, when it comes to your tax deadlines, it's so important to one, know what they are. And when you're a small business owner, there's a multitude of different taxes that you would be responsible for paying. And so some taxes would be like estimated taxes. If you're self-employed, if you're the business owner, those are going to be your payroll taxes. So specifically, that's going to be what you pay for income tax, and then your Social Security and Medicare tax. And then if you have employees, then you would have to consider payroll taxes, and payroll taxes are usually due at the federal and the state level. Okay, so when you have employees on your rolls, not only do you have to do Social Security and Medicare, but you also have to submit taxes for federal unemployment and state unemployment taxes. And then if you are selling products and service, so not all services, but most products, about like 99% of products are taxable as far as sales tax goes. And sales tax is actually charged at the state level, and it's money that you submit to the state. Um, so that's another deadline to be aware of. And then when is your tax return, your business tax return due, and what forms do you have to attach? And so those are really like when I first start working with a client or with a prospective client, and we're talking about taxes, that's really something that I do. We just run through what taxes are you responsible for, and then I always tell them to get a so whatever, wherever they have their business calendar, whether it's on their phone, if it's on the wall, to write down all of their tax deadlines. So when I was brand new, fresh out of college, I was just like a green mango, a green banana. My very first job out of college, my title was a staff accountant, but I was a bookkeeper. They just called me a staff accountant because I had a bachelor's degree, but it was bookkeeping, full suite bookkeeping. But anyways, um, when I was in training, one of the things that they trained me to do was to get the calendar, and on my calendar, and it was a big desk calendar, to write down all of the tax deadlines. So all of the quarterly taxes, annual taxes, is a payment due, is a form due, who do I submit it to? And so I would fill out a full calendar every single month. I'd go, and then they also trained me to put down all of the other deadlines. So when we pay the bills for the company, the 15th and 30th, when are the payroll runs, right? To put those in as well. When are the paydays? When is the payroll, I guess the payroll entry due to the bank? So if you're not using software like Gusto and ADP and QuickBooks to automate your payroll, and you're doing it yourself, you actually have to send the payroll entry to the bank by logging into the bank's portal in order to cut payroll. And it happens a few days before actual payday. And so all of those deadlines, I would have to go and fill out our whole calendar so that I knew each month when everything was due. And something that was also part of my training was that if I missed a deadline and we got penalties on it, that I was fired. And they're like, if payroll doesn't get cut on time and our employees don't get paid on time, you're fired. If you miss the tax deadline and you don't submit the payment of the form on time, you're fired. It was like that was part of the introductory training. Um, but that's really the easiest way to make sure that you're not missing deadlines, is just to add it to a calendar and then post it somewhere where you can see it. So whether that's at your desk, whether it's on the wall, whether it's in your calendar, on your phone. And if you're going to put it in your phone, then put reminders so that you have reminders to do it, and that you're not caught off guard and miss a deadline. Because when you miss it, then usually you'll owe penalties and interest on what was missed. um, so something else that I wanted to specify too for sales tax. So for sales tax is a customer tax. That is not a business owner tax. So, something that I see as a common mistake for clients is that they'll either pay the sales tax out of pocket, or they don't charge the sales tax because the customer doesn't want to pay it, or they feel bad charging sales tax. And so, what I encourage them is that all of us pay sales tax, right? And so, when you go to Walmart, when you buy your tickets from Delta, I mean, when you rent a car, whenever you purchase something, there's sales tax attached to it, unless you're a nonprofit 501c3 that's tax exempt. I mean, for the most part, you're paying tax on it. Okay, but those same people don't go to Lowe's and say, I don't want to pay the sales tax. Not doing it. I'm not paying it. Like, I want to pay only $20. That's it, out the door. You don't get to do that. No, even if you purchase it, I mean, everything has a sales, mostly everything has a sales tax attached to it. And so when you charge, you should, one, be charging your customer sales tax if your product or service is taxable, and then you're a steward of it. So that's not money that you can spend. That's money you collect and then you submit it to the state. And if you're using an accounting or bookkeeping software, and you're invoicing within that software, it should capture that information, tell you how much you owe, so that you can. Um, a lot of bookkeeping softwares, they'll even allow you to like print the actual form. If you have to submit a form and mail in a check or what have you, they'll have those forms integrated within the software. And so that's the part that you have to remember, is that, do I charge sales tax? And if I do, how do I submit it and when do I submit it? And if you have a bookkeeping software, your software should help you automate it. You just need to remember the deadlines. Okay. So and then with tax deadlines, when you were tax return deadlines, whatever entity you are, that's how you determine when your tax return is due. So if you're a single member LLC or a sole proprietor, your tax return is the Schedule C for your business. That's your business tax return, and the Schedule C is attached to your Form 1040, your personal tax return, and that deadline is April 15th. Now, something that I saw this past tax season earlier this year was that a client said that I won't say the name of the company, but they're a big box tax return company. And they said that the preparer was, okay, I can do your regular personal tax return, but I can't do the Schedule C. You have to go to a CPA to get that done. And then that's why they came to talk to me. And I said, no, that's incorrect. If somebody cannot do all of your tax return, they should not do any of it, right? Because what you have to submit is, it has to be complete upon submission. So if they couldn't do the Schedule C, they should have never accepted your money to do your personal tax return, because that form is missing. And so that's one that was like an integrity issue. If it's maybe that person was trained incorrectly, but if somebody ever says that I can only do this part and not that part, you have to go to somebody else. The answer is no. You just take everything and go to somebody else. And another reason why I say that is, say when you split up the tax return into pieces like that, the new person then has to go back and double check what you've already filed to make sure that it was done correctly, because then they would be now responsible for your tax return, which means that you would end up double paying two tax professionals for just one thing that you needed to do. So don't do that. I don't want to jump ahead of myself when I talk about what to look for when you're looking for a tax professional, but just make sure that whoever you go to has expertise in that area, and that or they can research it, or they have a tax partner who knows how to do it, but that they can do all of your return, not just some of it. Okay. All right, so tax deadlines, real easy. This is supposed to be basic and straightforward, right? For small business owners who are super busy, get you a calendar, write down all of your tax deadlines. You should be able to find them on your state tax, your state's tax website, and then on the IRS. The IRS has like tables of different tax deadlines that you can go to figure out when they're due. Or you can ask me, put it in the comments and ask me when it's due, and I can tell you. And then and then I'll even cite the page that I find it on, so that you know it came from the actual state or IRS's website. Okay. All right. So the next thing that I wanted to talk about is tax write-offs. So another topic that, or another set of questions that I get a lot is like, how do I know what is or isn't a tax write-off? So in general, in order for a business expense to be tax deductible, it has to be ordinary and necessary. So how does the IRS know if it's ordinary? when you file your business tax return, usually on that very first one, the IRS will ask for your NAICS code, NAICS, and this is really the government's way of breaking down businesses and organizing them within industries. So, whatever industry you're in, they'll ask for the NAICS code. You attach that to your return. And so that's how they can determine whether your business expenses are normal and ordinary. Okay, so for instance, I run an accounting firm. I don't run a horse ranch. It would be very strange for me to buy a horse, right? Like, I don't have a farm. Why would I have to? Why would I buy a horse if I have an accounting firm? And that seems like an extreme example, but it's there. That's what they're looking at with that NAICS code. Your business falls in this industry. This industry typically has these specific types of expenses, right? On the flip side, of course, like if you have a horse ranch and you people come and buy rides or what have you, you're going to have horses, you're going to have stables, you're going to have hay. That's normal for that industry and for that type of business. Right. And then it should be necessary. So something that I've seen just from like social media influencers and what have you is sometimes they'll advise that I just make it a tax write-off so I can reduce my taxable income. And so something that I wanted to so it when it's necessary, it means that you actually need that item. But if you're spending money just to try to reduce your taxable income, then one, if you're ever audited and found out, all of those transactions can be disallowed by the IRS and added back as taxable income. So, number one, that would be like a huge L for you if you got audited and it was found that those weren't necessary expenses. And then number two, that's not necessarily a tax strategy, that's just being wasteful, right? Just purchasing random things or the most expensive item just because you want to reduce your taxable income. That's not proper tax planning or anything like that. That's just wasting money. Um, there are things that you can spend your own money on in order to reduce your taxable income, and there's even things that you can do that benefit you. Like for instance, this is like real easy, like straightforward stuff. If you are self-employed and you have health insurance, your self-employed health insurance plan can reduce your taxes dollar for dollar. Okay, if when you pay your estimated taxes as a self-employed business owner, the estimated taxes is going to be income tax, social security, and Medicare tax for you on your income in the business. All right. But you can get a credit for half of what you've paid towards your own social security and Medicare taxes. And if you've never run payroll, this is probably not something that you're aware of, but when you're a W-2 employee, they take out from your paycheck social security and Medicare, and then your employer has to match whatever you've owed for social security Medicare taxes, your employer has to match that. And so when you're the employer, when you're the business owner, you can actually write off the employer side and get that back, get that money back when you file your taxes. So there are things that you can get money back from, but spending things that don't matter just so that you can reduce your taxable income, like I said, that's a waste of money. Don't do that. Okay, that's not tax planning. That's just being wasteful. Um, Let's see. So going back, how do you know it's a tax write-off? It has to be ordinary and it has to be necessary. Now, I've gotten questions, and I think a lot of times what makes it like a gray area is when you are the business owner and you're trying to determine, like, is this travel counted as a write-off? Are these meals counted? And I've had people ask me like if I need to go and get haircuts so that I can look presentable when I meet with clients, right? Or I need cosmetics, or I need, I need acne reducer, so that I to look better in front of clients. And really, a lot of those expenses are personal and they don't count as business expenses. And so, a good way to judge whether or not something is a tax write off, this is just kind of like a rule of thumb. Um, and it's because when you're the business owner, sometimes it's hard to think independently about a business transaction or about a transaction or an expense because you're spending so much time in your business. So a rule of thumb in order to determine if something is a tax write-off or not is just to think, if this was an employee, would I reimburse this as a business expense? And I know that's so let me give you a couple examples, right? So say for instance, your employee comes in and they say, "Hey, I have to look presentable when I meet with customers, and I'd like to be reimbursed for my clothes and for my haircut." What would you tell that employee? Especially if you're not, like, working in a modeling I don't know, there's for modeling and acting, there are certain circumstances where you can take those kind of expenses, but for everybody else, it's a no. And you would tell that employee no, right? You would say, "No, I can't reimburse you to look presentable." That's just assumed when you come to work that you will look professional and presentable for customers, like, all of us have to do that. That's a personal expense. Clothes, I went and I bought business clothes, I bought suits, I even had the logo, sewn on the inside of the suit. Is that a tax write-off? And the answer is no. When it comes to clothes, if you a business suit you can use for church, so you can use it at work, you can use it in your business, but you can use it for church, for a wedding, for a funeral, for a gala event, for a conference. That could whenever you can use something typically for personal and for business, a lot of times the way that the IRS rules, like in tax court or really in the law, is they rule that it's a personal expense. And so for clothes, you can't write off clothes unless the clothes are purchased for occupational safety reasons. If it's very specific to the job that you do and you can only use them at work, then yes, that's when it becomes like a uniform, or it becomes something that you could write off. Okay. And typically a uniform would be something with your logo on it. I've People have asked me, like, what if I sew the logo on the inside? I was like, no, it's not a uniform if no one can see your logo. And typically employees will only wear something that has a logo on it for work. They might go to the store or go to eat out after work, but they're using that to come to work. That's not something that they would typically use on their day off. um, Another thing, again, just going back to the rule of thumb, when you're thinking about, is this a tax write-off? I've had questions from business owners about car magnets. Like, if I have my car magnets on and I'm driving here, there, and everywhere, are all those miles included? And sometimes they'll say, I feel like it should be because I'm advertising for my business. And what I have to tell them is that where you're going and the nature of your trip is what determines whether or not it's a business trip and those miles should be included, right? And then think of it, for instance, we have to think independently, right? If you had an employee that left their car magnets on their car and drove home and drove to the park and drove here and there and then came back the next day and said, I've been driving after hours advertising for the business, I would like to be reimbursed for my miles, what would you tell them? You would tell them, "No, you're supposed to take your magnets off. I can't reimburse you because you're driving in off-duty hours. That doesn't count." Okay, alright, so, um, those are something, even daily meals, sometimes business owners want to they wanna eat out every day on the business card, and I'll have to tell them it's not covered, and it's not because I don't want it to be covered, but it's when you again, just going back to, it's better that I tell you than the IRS tells you. It's better that I tell you than you find out in tax court. It's better that I tell you, or somebody else who is responsible, who really wants to help you and can actually help you do real tax planning, that you hear it here and it's a little slap on the wrist, versus you get a letter from the IRS and then you're having to find out the hard way, going through agents, going through appeals, trying to take it to tax court, that it's not allowed. Okay. Even meals, why are daily meals not allowed? Think again, the rule of thumb we're going back to. If this was an employee, would I approve it, right? Would I approve it as a business expense? So say, and I've done this before as an employee, you have a group of employees that go out to lunch every day, and during lunch, they sit down and they talk about business. They talk about their work. They try to collaborate, figure out what to do. Could those same employees come back and ask for reimbursement for all of their lunch times every single day, just because they were talking about business? No, no, they couldn't, right? So when you're writing off meals, it is for, like, not everyday meals. It's for, like, when you actually go and meet with business, potential business collaborations, with clients, customers that you're trying to onboard, when you're trying to go and do an event in order to figure out if this is if this can benefit your business or grow your business. So those are just a few examples that I wanted to give you to help you see, when you have to think of yourself independently. Many things can be a tax write-off, but not everything, okay? Let's see. And then next, I wanted to talk about tax planning. So the end of the year is near. It's almost December 31st. And if you needed to do tax planning, so if you've been owing taxes, you owed taxes last year, you've owed taxes in previous years, and you can't figure out why, the time to do tax planning is now before December 31st. So if you wait until December 31st, or until after December 31st, there's really nothing that you can do to change what's going to happen for your taxes for this year. Okay. So if there's something that you need to implement it now. And even if you were looking at switching tax professionals, if you were thinking about, trying to find somebody to do your taxes, the time to find a tax professional is actually right now, when you should start interviewing people, vetting people, calling around, asking for prices. And that's just because once the doors for the IRS opens at the end of January, the most tax professionals are just like eye deep in tax returns, and it's going to be very hard to actually get on someone's books or reach out to them or get them on the phone because it's season for taxes. Okay, so make sure that that's something that you're looking to now if you are trying to look for someone else to take care of your taxes. Sorry, let me- I have a cold. Sorry, and I've been doing good mostly today. Okay, all right. So when it comes to hiring a tax professional, just like when you're looking for an accountant or for a bookkeeper, make sure that you find out if their license is in good standing. Do they have a PTIN, which is a tax identification number, like a prepared tax identification number with the IRS? So are they actually registered with the IRS to do taxes? How long have they been doing it? Do they know how to handle your situation? Excuse me, do they know how to handle your situation? And so those are some of the things that you should definitely ask when you're looking for someone to do your taxes. And then the only way to know if they can handle your situation is to be honest about what it is that you have. Do you have a rental property? How many children do you have? I mean, do you have all of their documents? What have you done with your books for your business? What kind of investments have you made? Do you have crypto in there? I mean, really, if you're looking to see if somebody's qualified to do your books, you have to tell them what you have so that they can then tell you whether they can take care of it or not. All right. And then another thing too is you'll know um, when you speak to a tax professional, a good indicator of someone that should be trustworthy is if they're just honest with you and you ask them, can you do this, and they say no. Right, they flat out tell you, no, I can't do that. No, I don't know how to do that. No, I've never done an estate tax return. No, I don't have a tax partner who knows how to do that. Yes, I can research it and I've tried, but I'm really not comfortable with doing it. um, and so that's always a good indicator if somebody is straight up with you when it comes to doing your taxes. Now, another thing that you should ask is how long will it take for you to get your taxes back, right? So if they drop off your documents, you definitely want to ask them what documents are needed for me to complete my taxes, and then when can I expect you to file? And if they're not going to be able to file on time, to ask them if they're going to be able, like, will they be able to file the extension on time so that you're not penalized for late filing. Now, even though you get an extension, the extension is only for filing the return. It's not for making the payment. So if you did owe money for that year, even though you have an extension on file, you still will get penalized with interest because the payment was late. So a lot of people don't realize that, but um, that's more of just an FYI. Okay, all right. So, what I covered today was super simple for tax basics. Get a calendar, list all of your tax deadlines on it at the state level and at the federal level. As far as what qualifies for a tax write-off, it should be ordinary and necessary. And if it's hard for you to determine whether or not your purchase is ordinary and necessary, and if you can write it off or not, the rule of thumb I always use is if it was an employee, a non-family employee, what would my answer be to that employee if they wanted to be reimbursed as a business expense? Would it be yes or would it be no? And typically, when it's no, that's also the way that the IRS feels. It's just a rule of thumb. And then also tax planning versus and tax preparation. Find if you need to switch preparers, find someone now. If you owed or you think you're going to owe for the year, there's a little bit of time left to do some tax planning, but you have to take action right now to find someone to help you navigate that or figure out what you need to do before December 31st. Okay. All right. Thank you guys again for watching. I have to go pick up my little one so we can go to the doctors. I hope that all of you have a blessed day. Thank you for tuning in. And thank you for all of the comments, likes, and shares. I really appreciate it.